Do you have a smaller trading account? If so, you're probably thinking, should I do penny stocks? Should I do options? Maybe you've never even heard of options. Maybe you've never even heard of penny stocks. Either way, they're both crucial tools for those with smaller accounts. So let's compare the two. Hey, it's Clay Trader at claytrader.com. In this video, like I said, I want to talk about penny stocks versus options and really break down all the different components that you should be thinking about when you're considering what avenue you want to take. And right off the bat, I'm going to say that I'm not biased. I do firmly believe and firmly favor one, and I'm going to try to prove it with this. But at the end of the day, you may be thinking, well, Clay, you just like that one because you have a course that you're trying to sell. Well, in my defense, I have courses for both of these, so it really doesn't matter which one I choose or which one you choose. Both courses are priced the same. So like I said, I have no bias here. I'm just looking at it in a very factual way, and one of those things where, just out front, no bias, no hidden agenda here. I offer courses on both, same price, so let's get started. So the first thing that you want to consider with anything is, well, what kind of fees are you going to be paying? What are the commissions? And with penny stocks and options, both are pretty darn similar, pretty close. Like any broker, you can find some that have really, messed up penny stock fee structures, but other ones are very straightforward, very cut and dry. Same with options. Some options out there, their fee structure is just crazy. I mean, it's just terrible, but other ones can be much more favorable. So I'm going to call the fees pretty much a wash. There's really none has an advantage over the other. However, when we move from fees into the government regulations, pattern day trader rule, if you haven't heard of that, then it's only a matter of time before you do. This is where options just blows penny stocks out of the water. In fact, this is quite a bit of a game changer as far as I'm concerned. Like I said, if you haven't heard of the pattern day trade rule, you will. And it's just a pain. Bottom line, it doesn't allow you to trade for as much as you probably would like to. It really hinders that. But with options, it's a way to get around this whole rule. In fact, I've done a whole video on that, so you can click on the annotation that you see popping up on the screen. I'll also link it down below. Like I said, did a whole video on that, just explaining how options can help you get around the pattern day trader rule. So for this, because of that, because of the fix they allow you to do for the pattern day trading rule, I'm going to have to go with options for this comparison. Next, the amount of opportunities. So what do I mean by opportunities? Well, how often, does an opportunity present itself in order for you to act on it and make some money? In penny stocks, depending on the cycle, sometimes there can be quite a few, but most times there's rarely any. You got to sit and wait and wait. Maybe wait 2, 3, 4 days. Sometimes you got to wait weeks before you finally get a move that makes any sort of worthwhile, impact on your account. With options, happen every day, all the time. I take that back, not all the time, but they happen every single day. As long as you know what stocks to be looking at, they literally do. And anybody that has traded options knows that, there's big movements. It's not, if I were to sit here and say, yeah, an option went from 50 cents to $1 or $1 to $1.50, that wouldn't be shocking at all. It happens on a routine basis. However, for penny stocks to have a penny go from 50 cents to $1, do you really see that often? You don't. So as far as amount of opportunities, there's always something going on in the world of options. Always something going on. If you've been around pennies, I've had a lot of penny stock in my trading group that have converted to options, because all they really say is, penny stocks it's like watching paint dry. You get in, now you just wait and wait. A day goes by, another day, and nothing ever really happens. Maybe something eventually does happen, but for all the time you're waiting, watching that paint dry for it to finally happen within the options market, there's been, multiple moves that have happened. Now, potential gains. For penny stocks and options, this one is going to have to be a draw. You got to give credit where credit's due. Penny stocks can give very nice gains. However, the big differentiator here goes back to this one up here. Yeah, they're big gains, but they don't come around that often. Up here, they really do. And this should actually be green, since that is the color we're using for penny stocks. So yeah, credit where credit's due. Big gains can happen on both. There's no denying that. But like I said, the thing that really separates is going back up to this point, well, the amount of opportunities. Big gains are happening quite a bit within options, not so much on penny stocks. Now, cost to get involved. What do I mean by this? Well, a lot of times what people hold, or what keeps people away from big board stocks, they say, I'd love to play big board stocks. I'd love to play a stock that trades for, $300. Well, with options, the cost to get involved can be very minimal. It can be as low as, $50 if you really want to. So again, for this, we're going to have another draw. Obviously, penny stocks, that's one of the big draws to them is, a stock's trading for, 15 cents. I can actually afford that. A stock's trading for 75 cents per share. Well, the way options function, and, by all means, go out there and learn more about options, same exact thing. You can literally get involved on a chart that, the stock itself trades for $400 per share. But through the way options, you could get involved, within that trade for as little as $50, $75, $100. You could obviously do more, but you don't need large amounts of money to get involved with big board stocks. That's, the big power of options. So we have another draw here. Now, at the mercy of, this is a very, I've never really thought about this, but I had some, like I said, a lot of people in my chat room have gone from penny stocks to options, and they said, it's so nice to not have to worry about management all of a sudden saying, well, we're having a reverse split, or well, we're going to have to dilute, or else we're going to have to raise the share structure. If you've been around penny stocks, you know that management is pretty shady. They're not the brightest bulb in the box, so you're really at the mercy of them. A trade could be going well, then all of a sudden, like that, management could put out some press release or do something just bizarre that all of a sudden ruins everything. However, with options, like I said, these are based off of big board companies. I mean, think about stocks that are household names. You're at the mercy of them. Do they have bonehead management? Sure, all managements make questionable decisions, but does the CEO of Apple, the CEO of Google, the CEO of any of those big name companies, are they really boneheads? No, they have it's them. They have their board of directors. So to me, just an absolute no-brainer. I will rather be at the mercy of big board management than at the mercy of a penny stock CEO who's probably got like a criminal background or something. So no contest here, not even close. Every single day, yeah, put me at the mercy of people that are actually running legit companies. How fluid? What do I mean by fluid? For this, I mean, volume-wise. For anything, you need volume, and especially for me and the group that I teach, I'm all about charts, and charts can be used for penny stocks, no doubt about it. It's one of those things where the CEO says, I'm not diluting, yet the price keeps going down. However, in terms of fluidity, how smooth the charts move, how well they're constructed, and just the way they come across your screen, they're just not as choppy. Penny stocks, you have very choppy charts a lot of times because there's just not that much volume. It's not as liquid, so it's not as fluid. So in terms of how fluid, options. And if you don't believe me, pull up a penny stock chart and then pull up like Apple's chart or Netflix chart or Facebook's chart or just a big board stock. Pull up those charts and then look at, let's say, a 15-minute time frame of a penny stock versus an options. You're going to see one very fluid versus one that's very choppy. So again, options win out. What about the ease of selling? Now, selling is the key word here because you can always buy something. I mean, everybody's always got something, especially in penny world. I mean, a CEO is always going to let you buy shares. However, the big question comes down to, can you sell? Because, right, buying is only half the equation. You got to be able to sell. And with penny stocks, again, not even close. If you don't believe me, that's fine. Go buy a bunch of shares. Let's say, go buy $10,000 of shares in some penny stock company, and then let me know how easy it is to sell when you want to sell. That's the key. When you want to sell, let me know how easy it is. With options, go put $10,000 in, and you'll notice that, hey, when I want to sell, you'll be able to sell very quickly, not much hassle. So again, one of these things where it's not even close. If you have experience, then you probably understand that, yeah, penny stocks, I bought the thing, but then when I wanted to sell, the bids kept dropping or all sorts of things happen. Not a coincidence. Penny stocks just are not very liquid. Making money flexibility. What do I mean by this? Well, with penny stocks, you can essentially only make money if the price of a stock goes up. Sure, there's people out there that say, oh, you can short penny stocks and this, that, and the other. I suppose you could, but that's going to require you going to an offshore broker, paying crazy amounts of fees because it's the way it all works. So technically speaking, if you want a massive headache and want to do a bunch of, dirty work, and I guess technically you can make money from penny stocks if they go down. but just a much easier, streamlined options, no problem. If you think a stock is going to go down, the way options work, you can still make money from it. It doesn't cost you any more fees. You don't have to go to offshore brokers, nothing like that. It's just very streamlined for money-making flexibility. Again, yeah, I guess technically you can make money from penny stocks if they go down, but trust me, just try it. If you don't believe me, say, you know what, fine. Go out and find a broker that's going to let you short penny stocks, and I'll just leave it at that. You'll see exactly what I mean about the headache and ease. Whereas options, no problem. You'll be able to make money if a price goes down. And then finally, and I really like this one, learn personalities. What do I mean by that? Well, with options, it's not a vast market. I mean, not every single stock out there has options, but that is the hidden beauty. Really, I'd probably say 10 to 15 stocks out there that have really good liquid option markets. So what a lot of people do is that they'll create a basket of stocks and they watch those same ones day after day. Remember, opportunities, there's always opportunities happening. Within those 10 to 15 stocks, something's always going to happen. But it also forces people to just watch the same charts, the same stocks over and over. And what's that going to allow you to do? All stocks have personalities. Anybody that's been trading for a while can attest to certain stocks. They have a rhyme and a rhythm to the way they trade. And they have, that's what I'm calling the personality. So when you are forced to look at a select amount of stocks, you're going to get to learn their personality. Whereas penny stocks, it's what's the flavor of the week. There's one stock that maybe everybody's talking about, and then that one drifts off into oblivion. Now there's another stock, that one drifts off to there's no continuity. There's no way to really learn the penny or the personality of a penny stock because they're not around long enough. They're gone. And that, of course, at the mercy of when you have bonehead managements, of course those stocks are never going to sustain themselves. Whereas when you have at the mercy of actual CEOs, actual shareholder or actual board of directors, it's going to be they're going to be around and you're going to be able to learn their personality. So without question, I mean, this one, not even up for debate at all. Options wins out there. So as you can see, looking down here again, I started the video, I have no bias. I don't care. If you want to play penny stocks, awesome. I offer a course for it. If you want to play options, awesome. I offer a course for it. So like I said, no bias. I don't care what you decide, but it's very, I think, in your face, and it's one of those things where if you have any experience, you can relate to some of these in regards to penny stocks and or options. The one thing is, but options are so risky. I hear that all the time. With no plan, with no strategies, with no rules, so are penny stocks, so is Forex, so is futures, so are bonds. Anything without a strategy and without rules and systems in place is risky. So the whole thing, but options, they're so much riskier. No, that's why, am I saying you just go out and blindly start doing options? No, you definitely need to learn a system and learn strategies. Like I said, for me and the members of my group, we use technical analysis and charts. And I'm not going to say that's what you absolutely have to do. But as far as the whole risk argument, that's the one thing where penny stocks are much less riskier than options. Give me a break. The same amount of risk for either one. That all is a function of, do you have a plan? Do you have a set of rules and a system in place? If I cross the street and I don't have a plan and set of rules, the rule of looking both ways, that's a pretty risky situation. So the whole risk is a function of a plan, not just any of these by themselves. So hopefully that helps narrow it down. Questions or anything like that, maybe if you have some other areas, leave those down in the comments below where you want to look for a comparison. But I'd like to hear from people. As always, if you enjoyed this and found it helpful, click that like button. Little things like that go a long way. So thanks for watching. Hopefully this helped separate out the two a little bit. Get out there and trade without emotion.